In 2025, China's economy teeters on the brink. Exports plummet 43.7%. Stimulus fails across the board. Banks abandon private firms, threatening 60 million jobs. Weak domestic demand, soaring debt, financial collapse looms. China's economy is running on fumes. What lies ahead? Stay tuned.
你敢信吗？
Can you believe it? Now, so many people can barely even afford to eat.
As a financial loan professional, this man has witnessed many changes in Chinese consumer payment methods since 2020. People first relied mainly on WeChat Pay, Alipay, and bank cards. But since the second half of 2024, credit cards and Huabei credit have become a dominant payment method. This reflects that many ordinary people now depend heavily on borrowing to get by. Consumption habits have also changed. Previously, ordering 3 dishes and a soup in a restaurant was normal. Now, the most common request is boss, just a fried noodle extra portion. Not only to save money, but also because economic decline is hitting everyone hard. Consumption has shrunk to survival spending, and the retail market has become stagnant. In 2025, the wave of store closures may worsen. The simple joys of life have turned into luxury items. He added, the job market is getting worse. Finding work is harder than climbing to the sky. Small business owners who have closed their shops are now looking for jobs too. Even some former big bosses are sending out resumes. Many have gone bankrupt and are deeply in debt.
我可能要活不下去了。
I might not make it. It's already the end of May and I still haven't found a job.
哎呀，那个普通人你生活太难了。
An ordinary person's life is too hard. Looking at last year's bad economy, I didn't earn much, and this year is even worse. I heard some experts say next year will be worse than this year. I keep wondering if the year after will be even worse than the next year. What are we supposed to do? I'm already facing unemployment.
你会怎么办？今天呢？
I've worked in engineering for more than 20 years. I really can't take it anymore. It was a call from my daughter that woke me up. I call on my peers to wake up too. I swear I will never work in engineering again. Look at us, those in engineering, either drowning in debt or barely getting by. This is a real situation.
In 2025, the Chinese government introduced a series of economic stimulus policies covering consumption and investment boost, real estate support, local debt risk mitigation, employment aid, and more educational resources. These efforts aim to tackle many of the challenges faced by the nation. These include falling exports, weak consumer spending, and growing fiscal deficits. In March 2025, the General Office of the CCP Central Committee and the State Council issued a special action plan to boost consumption. It included 30 measures in 8 areas. These included strengthening education, healthcare and elderly care protections, improving consumption statistics monitoring, encouraging unions to use funds in consumption sectors, and implementing assistance programs and lottery invoice activities. Official data from China's National Bureau of Statistics show that total retail sales of consumer goods nationwide grew by only 4% year-on-year in January to April 2025. This was far below the official target of 6%. This indicates further contraction in household consumption. The government also claimed that as of the end of February 2025, the balance of credit loans reached 9.4 trillion yuan. This represents a year-on-year increase of 25.8%, which is a 2.9 percentage point higher than the same time last year. Credit loans, also called unsecured loans, do not require collateral and can be obtained simply with an ID card. Any normal person aged 18 to 60 with stable employment can apply. Though the loan amounts are usually limited, these loans aim to promote consumer spending and theoretically benefit most ordinary people, including small business owners and self-employed individuals. Based on a population of 1 billion, the 9.4 trillion yuan credit loan amount averages to about 9,400 yuan available per person based on personal credit. But reality tells a different story.
Central bank data shows consumer loans surged to 9.4 trillion yuan nationwide in 2025. but delivery workers, cleaning staff, factory line workers, and construction laborers can't get loans at all. Have you ever been rejected for a loan? Have you seen a street vendor auntie get a 300,000 yuan credit line? Even DD drivers can't get loans up to 50,000 yuan. What's the real story behind this?
In reality, banks only recognize stable payroll income. This means more than 200 million short-term part-time workers are automatically excluded. Additionally, banks' automated approval system views a delivery worker earning 10,000 yuan a month as high risk, while a civil servant earning 5,000 yuan is considered a prime customer. Many wonder where exactly did the 9.4 trillion yuan in credit loans go, mainly to middle-class homeowners with property mortgages, government officials within the CCP system, and groups who exploit the credit to cash out points. As a result, those who genuinely need financial support are denied loans, while those with sufficient funds are actively encouraged by banks to take on more debt. American economist Davy J. Wong commented on this situation.
真正的解决问题的话非常困难。
To truly solve the problem is very difficult. The internal circulation, in theory, requires strong domestic demand and an innovative industrial chain. Currently, the average Chinese resident's social welfare is low. The biggest expenses for ordinary people are for elderly care, basic living, education, medical care, and housing. All essential life needs that are very hard to meet. Therefore, they have very little extra money left for consumption.
On May 15th, the State Council held a meeting on strengthening the domestic economic circulation. Premier Li Qiang emphasized the need to grasp the current economic situation and focus development strategies on strengthening the domestic circulation. He also stressed strengthening the domestic economy, helping foreign trade businesses, keeping jobs stable, boosting investment, and supporting local growth. Meanwhile, newly released data from the National Financial Regulatory Administration shows that by the end of March 2025, loans to small and micro enterprises in China totaled 35.3 trillion yuan. But this number dropped to 34.3 trillion yuan by the end of April. This is a decrease of 1 trillion yuan within just 1 month. This decline shows that these enterprises not only did not obtain new loans, but were also repaying debts. Experts suggest that the only explanation is that in the context of the US-China trade war, commercial banks are refusing to lend to export-oriented private enterprises and instead are demanding early repayment. The central government and central bank have consistently emphasized increased loan support to private enterprises, especially small and micro businesses in coastal provinces. These businesses are often seen as the backbone of China's foreign trade exports. But since the outbreak of the US tariff war, this policy has been abandoned. Major commercial banks, mostly state-owned or state-controlled, are ultimately controlled by the Ministry of Finance. Many senior executives of those banks come from what many call red noble families within the CCP who have strong political backing. It is believed that they often ignore central bank directives and act according to their own business logic. There has been an observed pattern of many of these officials prioritizing risk avoidance over national policies. This power imbalance within the CCP system prevents effective command over commercial banks, especially at critical moments of the tariff war. The banks forcing to export-oriented private enterprises to repay loans early reveals the financial system's disregard and even abandonment of private businesses. This violates commercial banking credibility and has been described as cutting the branch one is sitting on and digging one's own grave. These actions are observed to be threatening the survival of the already fragile private enterprises. According to China Customs statistics, China's export to the US in March 2025 fell 43.7% year-on-year. Exports of textiles, toys, and small appliances dropped more than 60%. Christmas orders collapsed entirely. The US-China tariff war has hit Guangdong's foreign trade especially hard. Dongguan, a manufacturing hub with annual reports of $150 billion US, nearly $40 billion US to the US, has found foreign trade at a standstill under high US tariffs. Both sides recently reached a temporary tariff agreement. It grants a 90-day buffer period. During this time, existing 10% tariffs remain. Also, an additional 20% tariff stays in place, imposed under the Trump administration due to the fentanyl crisis. All other tariffs added since April 2nd were cancelled, but no one can guarantee the tariff war won't start again. The US demands that China open its market and remove non-tariff barriers. The US also wants China to fully carry out the structural reforms promised when joining the WTO. As an authoritarian government, Beijing tightly controls nearly all important resources in China. State-owned or state-controlled enterprises, including banks, often perform poorly, yet consumes many valuable resources. According to World Bank estimates, as of 2023, state-owned enterprises directly contribute only about 20% to GDP. These were mainly in capital-intensive sectors such as energy, telecommunications, infrastructure, aerospace, and aviation. Private enterprises dominate consumer goods, the internet, and related high-tech industries. A research report from the Renmin University School of Economics showed that state-owned enterprises receive a far larger share of bank loans than private companies. As of 2023, almost 60% of banks' corporate loans went to state enterprises. These firms face fewer obstacles in assessing financing, with lower interest rates and longer terms compared to private companies. During Trump's first term, the US already demanded that China open its market and fulfill commitments to eliminate non-tariff barriers and implement structural reforms upon WTO accessions. Structural reforms include core issues such as intellectual property theft, forced technology transfers, state subsidies, market access barriers, administrative interference, and manipulation of interest and exchange rates. These topics remain the central focus of US-China tariff negotiations. Experts comment on these as the areas the CCP is most reluctant to touch. They require deep systemic reforms that the CCP cannot accomplish on its own. Doing so would fundamentally undermine the core pillars of the international free trade system. This will effectively be destroying the power base that the CCP depends on. It would be tantamount to overthrowing itself, which is impossible. Therefore, the CCP often avoids and resists commitments involving such deep reforms. This led to the first phase of the 2020 US-China trade agreement covering only superficial issues both sides agreed on. This included increased Chinese purchases of US agricultural products. The CCP temporarily eased pressure through limited concession but failed to address US's core demands. When negotiations moved to the second phase, targeting deeper issues, China stalled under the pretext of the COVID-19 pandemic, causing talks to break down. Trump concluded that China lacked sincerity and had no intention to implement structural reforms. Former Chinese Vice Premier Liu He once highlighted the role of private enterprises in China's economy. He noted that private firms contribute over 50% of tax revenue, more than 60% of GDP, over 70% of technological innovation, 80% of urban employment, and more than 90% of new jobs and businesses. In other words, even the Chinese government must acknowledge that private enterprises are the true backbone of the country's economy. The four most economically developed coastal provinces and cities employ more than 300 million people. In Guangdong and Zhejiang, private enterprises account for 60% to 80% of local foreign trade exports. They also play a key role in job creation. Workers in foreign trade and related industries represent at least 20% of local employment. Experts warn that if exports to the US fall by 80% over the next 2 years, potential job losses could reach no less than 60 million. Another core issue in China's economic structure is the relatively low share of consumption. This limits the ability of domestic demand to drive growth, especially amidst a sharp decline in foreign trade exports and trade surplus. Data from National Bureau of Statistics show that in 2023, household consumption accounted for only 39.6% of China's GDP. Globally, the average is usually over 60%, while in the US, consumption exceeds 80% of GDP. China's Engel coefficient, which measures food expenditure as a share of income, stood at 30.1%. This was far higher than the US at about 7% and the global average of 15% to 20%. More than half of Chinese household spending goes to food and housing. This indicates that a large portion of income is still devoted to basic living needs, limiting growth in non-essential consumption. The global competitiveness of Made in China relies on this model of low consumption and high savings. Export-oriented industries are supported through subsidies and low-cost financing. But if the trade surplus falls, the government may be forced to increase investment, meaning rising debt and efforts to stimulate consumption. According to authoritative sources, local government debt in China reached 92 trillion yuan by 2022. Off-balance sheet debt from local government financing platforms may be as high as 65 trillion yuan. The shadow banking sector is estimated at about 60 trillion yuan. Much of this money flowed into real estate and local government financing platforms, creating high default risk. A drop in land transfer revenue has left local governments unable to repay debts owed by local financing platforms. Real estate projects financed by shadow banks suffered heavy losses after developers like Evergrande and Zhongji Group defaulted. Zhongrong Trust 2023 default, with liabilities reaching 420 billion yuan and a shortfall of 260 billion yuan, exposed the vulnerability of the shadow banking sector. April's social financing data further showed contraction in financial activity. New loans reached over 7 trillion yuan in January, fell to just over 2 trillion in February due to the Spring Festival, rose to over 5 trillion in March, then dropped to 1.16 trillion in April. New Chinese yuan loans stood at only 88.4 billion yuan. Foreign currency loans, entrusted loans, and trust loans all posted negative growth. This represents a near stagnation in commercial activity. In 2025, the Chinese regime launched a series of economic stimulus policies. These include consumption and investment incentives, real estate support, local debt risk mitigation, employment assistance, and education resource expansion. These aim to counter challenges like falling exports, sluggish consumer spending, and growing fiscal deficits. So far, these measures have yielded little effect. These policies not only fail to address the inherent problems of China's centralized government, but may collapse under external pressures like the US-China tariff war. Neglecting the country's most dynamic private enterprises has contributed to significant strain on China's financial system. Experts warn that the system faces challenges in maintaining long-term stability, with an increased risk of economic disruption. Some analysts suggest that a large-scale systemic financial crisis could occur if current conditions persist. This situation is seen by observers as a consequence of the government's centralized approach and policy decisions.